Hey, good afternoon. It is Friday, October 26th. I'm telling you, Friday could not have come soon enough, right? Trick or treat, we got our market full this month, this week, as the markets have started tanking, and so have the profits from the hedge funds. There is just more bad news that the hedge funds are all going out of business. I talked about this in my August webinar, and the trend is continuing with more funds going out of business, quite a few, um, eh, handling billions of dollars of money, just losing so much this year because they do not know how to handle the volatility. They're still using trend trading strategies on equities, and it does not work. The markets have gone, um, the strings have been cut. I've talked about this several times. The very first day that Jerome Powell got into office, the market volatility started, and that's because they took the floor out of the market, and the market is finding its own boundaries. In fact, here's a level. We ended right at just below the October 11th low, pivot low. Um, so we may be trying to stabilize just a little bit, but let's go back and look at a daily chart, and I will show you here this February, month of February, is where Powell got into office, and that's when the algos started realizing that they could bust those little tiny ranges. And that's all we had in the market for like 10 years of that QE were these little tiny ranges during the day, and it was all very uniform. So these hedge funds, you know, it was very easy just to buy some shares and sit there and hold it because it would end up going up, 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 because that's what it did for 10 years. um, Especially buy low and just, sell it. Now it's gone nuts, crazy nuts, and they don't know how to trade it. Well, stop by the trade room next week. Anyone, all the CTAs are welcome to come into my trade room next week. Um, and I will show you my volatility indicator that's based off of a linear regression mean or median line. So my mean or median, that channel right there, the line, I have two lines on this indicator, a fast and a slow. The fast will come in and out of that slow band, but the mean mode is right there, and that's what I base my volatility levels off of it, and they're wonderful. So, and it's so dynamic. It is the same in all time frames. Um, you can see this is the ATR6, and that's where all the algos will start buying every time it hits that ATR6 on the daily 6, they start buying it, and that's what's happening now. I do think that they're bound and determined to get it down here to those February lows, because they've started valuing the market lower. And how did they do that? It's like Google made $1.1 billion more on the top line revenue than they did in Q3 and Q2. 1.1 billion more in Q3 on the top line than they did in Q2, but it wasn't good enough. The consensus said that they should have made 1.4 billion, so they missed by a little tiny fraction, and the market sends it down because it's a revenue miss. It's the first time that they had a miss. So they over valued those revenues. They're making the consensus too difficult to achieve, and so as soon as that first time that they did not hit it, the market tanked, and that's what we've been experiencing this week, as the numbers or the market came into that number, and especially the rout that we got overnight, as the market came down this week on those numbers. But this indicator I have is still fantastic, and as you can see here, once it gets down to those ATR6s, the algos start kicking in and start buying it. So what do you do? It's the same dynamic level. You can sell your 2s or your 4s in a downtrend, and buy your 6s and 4s in an uptrend. So 2s and 4s in an uptrend. Let's take a look at the 15-minute chart. And it will go out to those 6 and or 8s and 9s. Once it gets out to that 9 and starts pushing out, it gets over its skis and will always come back in. It never stays below the 9. That's why I call this my cloud 9. Very rarely it's over its skis, it's going to come back in, and it always goes back to your linear regression. And that's a dynamic linear regression. I will put the regular linear regression on the chart for you so that you can see what that looks like. And the market adhered to that today. Anytime it approaches these levels, it will react to them on an intraday basis. Gets overextended, it pushes it back up. Gets outside of it, it pushes it back in. So it's the same theory that you want to stay within your boundaries. I had my level a little bit different this morning set up, so let me get this off the chart. Go back and try to do that one more time. But that's the same concept. You're shooting for that middle median mode, and when you get above it, you're going to be sending it back down and vice versa. So yeah, let me get that off the chart. And just use this indicator as a volatility indicator to help you make your trade selections. And you can see how flat we stayed today, and how to trade this on an intraday basis, especially these reversion to the mean markets like the NASDAQ. And you can see when it gets outside the 4, these are the best opportune times to take it back to a 60-minute for looking for these key sweetheart trades. Right here, right here, right there, right here breaks out, and get your runners. Those are the best times to go in on an intraday basis, so that we're always looking to see, do we have a breakout runner on a higher time frame, because that's when you want to go in on your lower time frame and be able to make the most profit on a directional trade, instead of going sideways and getting chopped up. It's running. And so that's why my indicator, you not only have your boundaries, you can see the sweetheart trades, the sweet spots. And again, it's dynamic. You can put it on any time frame, including a range chart or a Unirinko. There was a sweetheart runner. Another way to look at this indicator, which is very helpful, is to get rid of, or to change, not get rid of, but just to change the look. And so instead of showing anything other than a 2, so that you can really see those runners on an intraday basis, like your 3-minute chart. So anything outside of a 2 would give you an opportunity to trade, and so you can see that the fast line broke that 2. Your ATR 2 is way up here, and price is way down below it. So this is your day trade nirvana. This is what we want to see, especially as long as those opens are trading below the fast line 4. And this is the one that's the 4, or slow and fast, however I call it, my nomenclature. So once that counter trend trade goes inside the 4, it can mean that that second leg, or that measured move, the trade's coming to an end. So if I were to put all of the ATR levels back on, we would probably see that that was an 8 or a 9, and it comes back in, and the trade's pretty much over at that time. And usually it will end up at the linear regression. Once the cloud changes over from red to white and you get that crossover, you see the cross, you're in an uptrend. There's your main mode or median line for linear regression, and you can see how price will come down to it. And as long as it's respecting it, you're in an uptrend. Don't even look for any more short trades. You've changed direction. There's a sweetheart trade. So you learn to identify these and grab those trades as they occur. The plots of this are exposed, so you can set this up in Bloodhound to create your own strategies from it in NinjaTrader 8. You can get any strategy that you want. If you want, the breakout trades, or if you want to find a reversal on the 2. Oops, I didn't mean that. This circle, here it is. If you want, well, I did it twice. Here, it's up this one. There we go. If you want the reversal on the ATR level, you can code that up to show the reversal on these specific ATR bands. And in fact, you can code the 8s and 9s and just be waiting like a spider for them to hit the 8s and 9s and show a wick and do their counter trend trades back to the mean. But I like this way to look at it because it will clear the clutter up for me. I know exactly if it's going to stay in the trend where that bounce. So now we see inside the pullback. We know if it's going to, maintain its structure. So here's a 1, 2, 3. And there's your bounce, and you can actually see it. You can actually now code the 1, 2, 3. Isn't that exciting? By having these conditions and looking for those reversals. So I'm hoping I'm giving you guys a pretty thorough view of this. When you see behavior like this, and we'll be in the trade room just going, what the hell do we do with that? You just sit out. I mean, there's nothing you can do with this. This is just, yuck. Algos are clueless. They don't know which way to go. They don't know whether to go long, short, or they're getting like slammed. And what is happening is, I will show you, is this is exactly what's happening, is algos are coming in there and sending it in, and the algos are coming in there and sending it down. So they're getting the double whammy. So until that resolves and it broke down and you get a clean body close, then just stay out of it. So that was a very short-lived excursion to the downside. But once it breaks, I mean, jump all over it. You've got a very short window, but you can pick up, 10, 20 points and get in and get out. And that's usually what we're waiting for. We're like, waiting for these moves. And I think, it's really much, much better to sit there and be waiting for a nice trend continuation, 1, 2, 3, than trying to catch a breakout off after a volatility nightmare on the ATR2 back and forth. But that's exactly what happened. Algos are sitting there on the 2 top and the 2 bottom, sending it in opposite directions. And that's what that looks like there. More of the same, just a wick fest. And when the bands expand wider like that, and flat, there's only one way to sell a range, right? You do the same. And if that's the way you want to trade, then you know what to do. I just look for a different market. We want nice, orderly order flow, something like that. Something that we can control on an intraday basis. And so that's why we love these 3 minutes and 15-minute candles. It's always better to have a 15-minute candle to anchor your trade, and a 60-minute, preferably both, a 60 and 15, before you get into that 3. But sometimes price is just not behaving, and that's why those hedge funds are losing so much money. It has become volatile, but they don't have a way to read the volatility, and we do. So we have a much, better time of it than they are. So like I said, if you're a CTA watching this, pop into the trade room, go by the website and get a week and come see us. You're more than welcome. So let's look at the crude market. And you can tell that we've had a sweetheart to the downside. And I think this is probably going to be, probably running to the downside a little bit further, getting down towards 64. With that said, we're coming up very, very soon on those Iran sanctions coming up in the next week or two. So it could bounce up just as easily as it could go down at any moment in crude. So just be very, very careful. Your triggers are way up here. So you have plenty of time for price to counter trend trade to get it back up to the triggers, or stay below the line. But just be careful in crude. Those Iranian sanctions are around the corner. But here's some excellent daily price action. I mean, look at this sweetheart trade here. Just beautiful. This is what we want to see. I mean, that's nirvana on a daily. This chart looks a lot like the NQ. Stabilized this week some, but this is your 60-minute. So speaking of next week, there is a ton of reports on the economic calendar. Let's take a look at next week. Everything Monday through Friday is going to offer us some trading opportunities next week. PCE inflation numbers to start us out on Monday. Tuesday, European business numbers, GDP. So overnight, German unemployment, Eurozone GDP to trade that euro. Consumer confidence, Case-Shiller on Tuesday. Wednesday, you're going to get into some more CPI numbers, Australia, New Zealand, China manufacturing, big number on Japan. Their monetary policy statement, your interest rate decision, it's probably, we already know nothing's going to happen, but you never know. Their press conference coming up. Eurozone CPI, ADP non-farm employment, Canadian GDP, crude oil inventories. It is going to be a huge week. Thursday, we have our Bank of England reports, interest rate decisions, our initial jobless claims, our manufacturing PMI, ISM manufacturing PMI, the first day of the business month, will set the whole tone for the month. And then Friday non-farm payrolls. Are you kidding me? It's going to be just a trade fest next week. And hopefully we continue to see the strength in these economic numbers supporting this market. I've never been on a rant in my life that I was this week or the last day, that over estimates in Google and Amazon causing their revenues to miss because those consensus numbers were so high. Can you imagine $1.1 billion, and they sell advertising? They made more money than the last 3 months ago on the top line. That's not after all the funny accounting stuff. That's the top line profits, not earnings, but revenue, sales, and it wasn't good enough for the market. So that only means that they're devaluing the market and they're forcing it to go down. They mean whoever controls the consensus controls the market. And I'm just starting to figure all this stuff out. So I shouldn't get so upset about it, but I'm still upset. Because of all the economic growth, they're shorting the growth on purpose, and I don't know why, but it should be a national security issue in my mind, because we have this phenomenal growth and tax cut deregulation and all this money coming back on shore, and all these numbers are great, and the unemployment's the lowest it's ever been. The people are working in all demographics, and I'll stop. Don't get me started. But anyway, I love my new LRT lines indicator. I hope it helps you in trading, and I'm looking forward to using it during the upcoming years. Thank you so much. Y'all have a great weekend, and we will talk to you next week in the trade room. Bye-bye.